Hi, Ron Benning here with a Sacramento Duplex Market update for the period ending July of 2025. In this video, we'll look at key developing market trends and what the target break-even GRM is for a Sacramento duplex. Developing trends leave evidence, so watch to the end if you want to know what's likely to happen. July of 2025 was a neutral market for duplexes in Sacramento. We currently have a 5.3 month supply of duplexes on the market. This is up 29.5% from last month and up 133.3% compared to last year. Inventory continues to grow significantly. This year's bigger selection means that buyers who waited may have a much better opportunity to buy. Let's look at the sales activity. There were 23 closed duplex sales in July, which is down 28.1% from June and 36.1% lower than July of last year. The average sold price was $567,000, a 4.9% decrease from last month and 8.7% lower than last year at this time. At this point, there's no denying prices have been trending downward. Pending sales were up significantly. We saw a 57.1% increase from last month, with 44 properties going under contract. Compared to July of last year, pending activity is up 15.8%. So even though closed sales are down, there's still strong buyer interest. Will this be enough to keep the duplex market from moving into a buyer's market soon? Only time will tell. The days on the market came in at 28, down from 36 last month and up slightly from 26 a year ago. The sold price to original list price ratio was 100%. That's up 5.3% from last month and 3.1% higher than a year ago. That means well-priced duplexes are still selling close to asking. But I've also found that sellers are more likely to bargain a little bit on aged inventory. As for mortgage rates, they've remained relatively stable, but are still higher than historic averages. In fact, today's rates are among the highest we've seen in over 20 years. We haven't experienced this kind of interest rate environment since the early 2000s. It's important to view these trends in the context of history. Inventory is also high right now. You have to go all the way back to 2014 to find duplex inventory this high. The key differences back then was that the interest rates were lower. They were in the 4.5 to 5% range. So this time it will be harder for excessive inventory to be absorbed. Today we're seeing that inventory is rising again, which is putting downward pressure on pricing and keeping the market more neutral. It's a good reminder that real estate moves in cycles and we appear to be in a slightly different phase than we were back then. If you're enjoying this video and you're not already subscribed to my channel, please subscribe now so that I can keep you informed about the latest investing trends. Assuming 25% down, the break-even GM for a Sacramento duplex right now is 11.9. So what's likely to happen over the next month or two? If inventories continue to rise, we may shift from a neutral market into a buyer's market. This is a great time for buyers to act. There's more selection and more room to negotiate. The duplex market is in a much stronger position than the fourplex market right now, though, and may remain neutral. For sellers, it still can be a good time to sell if you just price competitively. If you want an update on your property's value, look in the description below for a link. If you're not already getting my GRM reports and MLS updates, check the link in the video description to get started. And whether you're thinking of buying or selling in the next 7 days or 7 months, give me a call, a text, or you can reach me at 916-730-3846. I'd love to help you plan a smooth purchase or sale transaction.